Welcome to Focus on Alternatives, an educational series from ADISA, the Alternative and Direct Investment Securities Association. At ADISA, we're committed to providing insights and thought leadership on alternative investments. I'm Jade Miller, your host for today's episode, and I'm pleased to be joined by Amy Arnold. Amy, you have built a reputation for one of the most respected and rigorous due diligence processes in the industry. With what some would call as close to perfect as a resume as you can get, as we enter this next generation of due diligence, compared to 24 months ago, what's changing most dramatically in what you're looking for and how you're looking for it?
I would say if you had asked me a few years ago, I would have said that due diligence was about validating the deal. Today, it's just as much about understanding who you're partnering with, because they're the ones that are going to make the magic happen within the fund. So I think it's moved more towards a relationship-driven business. You can have the perfect offering structured on paper, but if the people running the deal, you don't trust them or they're not qualified, I think that it's made more of the focus on the sponsors and the relationships with the sponsors and understanding how they will interact with the BD, with the reps, and with the investors. It's very important to have that kind of partnership with the sponsor, because when things go bad, you want that type of sponsor that will communicate and tell you what is happening and why, not just disappear. So I think bringing it back to sponsor-driven, to people-driven, obviously the underlying structure, everything like that has to line up as well, but bringing it back to people-driven and making it more focused on those sponsors rather than just the deals.
So that brings me to a good point, right? We are seeing, especially at Concord, your firm, the bar for sponsors to get on that platform. It's always been a high standard. It's getting even higher, and that evolution is coming not just from the deal itself, but from, I would say, the sponsors being more transparent with you, building that relationship, taking the time. I think a lot of people are looking for an easy button. How do we get on quickly? How do we get a deal in front of someone? How would you best explain to a sponsor how to build that relationship and where to even start?
Well, luckily, this industry is growing, and we have people that are called trusted advisors that help sponsors get into the business, entities, firms that help them. I think the most important thing to remember, it's not just that the bar is high. It's high for a reason, because it's investor-focused. And there's many new entrants into this space as well. That kind of causes a little bit of noise, but at the same time, the new entrants are new opportunities. And we have to vet those because we at Concord want to provide the most quality product for our reps to choose from. And looking at those new entrants is very important. But new doesn't mean no, but it means that we have to dig in a little deeper, make sure that we understand that sponsor and how they operate and that we're comfortable with it. So I think getting comfortable with the sponsors, not just the deal, it doesn't necessarily mean the bar is higher. It just means that it is a fully vetted process that we need to go through. And that takes time, especially with many new entrants. But coming to the table with a good product, obviously, is the first step. But coming to the table with your story, your transparency as a sponsor, and making sure that the people that will be selling your product truly understand that product. And I think that's kind of where the bar is at, that we need sponsors that are educational, not just marketers. Educate on the product, show the reps, the financial professionals, advisors how to sell the product, but also how that product reacts in different markets so that they can fully tell their clients that are looking at the products as well. So I think the bar is really at education and transparency right now.
That's a great segue, because I feel like education and transparency is something we're very passionate about at ADISA. We are trying to help new sponsors, as you mentioned, existing sponsors continue to enhance their communications, their transparency. So let's talk about investor communications. This is an area where sponsors vary wildly. What does best-in-class investor communication look like to you, and how much weight would that carry in your evaluation?
It carries quite a bit. When I'm evaluating a new sponsor, that's one of the questions that I ask and would like to see past investor communications. To be able to trust somebody in this space to manage your money as an investor, you need communication. That's the way you build trust with them. So at least quarterly investor communications, if not more often, but depending on the asset class and the product itself, have that quarterly communication and make it meaty, make it actual subject matter about the market that asset may be in, numbers, things that are going on in the area, and be transparent during the whole process, because it's only going to help if something goes wrong. Because if something goes wrong, they're going to see why, if they've been communicating it all along. If they, just a case in point, a sponsor is having issues with a particular property. If they've been communicating all along and being transparent to the investors, it's not going to be a surprise if they have to lower distributions or something like that. That's market driven. It also, honestly, helps the sponsor in the long run, if they're a good sponsor, because that communication shows that they're trying to be transparent to the investors. They're trying to show market situations that might have an effect on that actual product. And if they're communicating all along, those surprises aren't as shocking, and you don't get the arbitrations and the and the stuff that, on the BD side that has issues along with it.
So is that something you would say when you're looking at track record, you're not just looking at track record and numbers, you're looking at track record at how they've communicated in the past as well?
Absolutely. Absolutely. We want to see past communications. And we are looking for if they're communicating the good with the bad, not just the good. We want to see different changes in the asset classes and how they're working, and just that transparency. So yes, it's a very important part of our due diligence process to be able to see past communications to investors.
So speaking of communications, I think immediately AI, right?
Mm-hmm.
AI is transforming everything in today's day and age. It should be significantly easier to put out timely investor communications given that, but AI is also transforming due diligence, right? It's entering into nearly every niche corner of our industry and investments. How is your team beginning to incorporate AI into the due diligence process, and where do you think it's going to have the biggest impact?
Inevitably, we're going to have to embrace AI, and we have at Concord. We utilize it more for data gathering than anything, quickly gathering information. It's pretty easy once you get into AI and start figuring out the prompts. The prompts are everything. Now I have a list of prompts. I've been asked to sell those prompts, and I won't, but it makes it easier to gather information quickly.
Does it ever concern you on the sponsor side? Like, are you concerned that some sponsors are going to start using AI in underwriting or asset management? Does that relationship with technology concern you, or does it make you excited on their operational sophistication? Are there any red flags that could be raised from sponsors using AI?
I mean, yes, there could be red flags, but I honestly, from my viewpoint, see it as a sponsor that's evolving with the times, that is being proactive and trying to utilize all the resources that they can in order to be transparent and communicative and talk to the clients. When it comes to underwriting, AI or a computer can do that, and I'm sure it's utilized already, but we want also to see that human experience. Obviously, the people behind the products, their experience, we don't want to see, just total reliance on AI to underwrite something.
So that's something that's coming up. I'm sure you're hearing more of it from advisors, from investors. I can do my own due diligence. I can just run it through
Exactly.
AI. Where do you think that is going to have a flaw? I think, there's always a flaw in everything. Sometimes I read through what AI put in my emails, and I'm like, nope, that's a good thing I proof check that. That would have sounded awful. So where do you think that there's going to be some errors in AI due diligence versus human due diligence?
There's quite a bit of area that could have errors. AI is not completely reliable. It can return false results, etc. I think when it comes to proper due diligence, it's evaluating the layers of risk. All investments have risk, especially in the alt side of the business. So they all have risk. So it's layering that risk and weighing whether it is the appropriate risk for the possible return. That's pretty simple, right? But I'm finding that AI can point out risk, but it doesn't take into consideration those layers and whether those layers are appropriate. So I think that will always, or at least for the near future, be an issue with AI and relying on it solely. I think it's a great tool for financial professionals to be able to say, yeah, I can run it through this and pick up on some of the things, but it's not going to pick up on everything in those layers of risk. It's definitely not going to pick up on how a sponsor reacts in certain situations. So circling back to sponsor relationships, seeing how they've reacted in the past, there's no perfect sponsor. There's no, like I said, there's no perfect investment, there's no perfect sponsor, but how they've reacted in the past, when market situations have come up. Are they communicative? Are they talking to the investors? Are they talking to us, the BDs, and actually explaining what's going on and why?
That makes perfect sense. So, Amy, we have a lot of people who come to us and they're like, how do we get on someone's platform like Concord? So if there was a new sponsor, which ADISA has fostered a ton of new sponsors with TNDDA, their first time to this industry, walk us through, for Concord, practically speaking, what they should have ready. Because your first impression is everything. That's going to decide if you want to build this relationship. What's in a first day package that tells you if it's going to be a productive conversation for you?
Well, I'm a little different. I'm a little different than some due diligence officers. I'm not scared to admit that. So I back into some things and I can explain that process. But to have a complete, I would say, first day package with me, at least have your story together, how you came together, how you formed, why you chose this certain asset, be able to fully explain why this is the asset that you feel like people should invest in. And, obviously you're going to want your due diligence materials, your PPMs, all of your supporting documents, appraisals, phase ones, all of the due diligence stuff. But I think the first impression is going to be your story to me. Is it marketing? Is it truthful? Is it too marketing slanted, I should say? Or is it truthful about the product, why it's put together, how it operates, and where you see it being invested within a portfolio? And being able to explain that in a full manner, and it's just not a marketing pitch. I want to talk to people one-on-one. I want to relate with humans and hear their story and why they chose a certain asset. So I think that's the first step. I explained we kind of go a little backwards sometimes. I will vet a product to see initially if I think it will pass due diligence, and then I dive into the sponsor and the product itself, much more fully in a full review. So I kind of go a little backwards. But if you're going to approach me, and I think any other broker-dealer in this business, at a conference or a phone call or, a touch point in some way, give me your 30-second story. And then if it's intriguing enough that I think our reps, our financial professionals would be able to embrace it and that it has a reasonable chance for success, then we can move forward from there.
So you mentioned relationships in this industry. I'm fortunate enough to have a relationship with you for years now. So I would say we know each other pretty well. I know that you've had some conversations, and I'm lucky enough that I can read your face. Yeah. I can tell by your face when there's something that there's a red flag, there's a non-negotiable. What are those? What is that red flag that pops up when you're talking to someone that no amount of explanation is going to move the needle? Are there subtler red flags that are like, more of like a yield sign? Is there something that you're like, don't love it, but I'll still listen? And so what are the hard no's and what are the yields?
Hard no's. I'm not going to say I have a lot of hard no's other than gut feeling, and I know that sounds horrible. But when you're talking to somebody, you can tell if they're genuine about the product that they are pitching and whether they believe in it. I think it's just a sales opportunity. So I think that would be one of the red flags, a hard no kind of thing, a walk away, no. When it comes to other items, you say you can read on my face. It would be more of, it's a marketing pitch. This can sell. Well, yeah, good financial professionals can sell anything. That's what they're in the business of doing. But is it a true offering that is meant to help clients in the long run in some way, whether it be tax benefits, income, growth, whatever that may be? And I'm trying to think of some really hard no's. I think it all boils down to layers, like I mentioned earlier. Is typically when I turn down a sponsor, it's because they give me incomplete answers to my DDQ or graze over things. I want somebody that's going to be completely transparent, that's going to say, you know what, if interest rates go up, we're going to have a problem. And if they're not telling me that up front, and I know that, that's kind of a red flag to me. I want them to point out how the good markets and the bad markets can affect some things. It comes down to how they answer Are they marketing slanted more than informational, educational slanted? And are they fully committed to the IBD space? We're an independent broker-dealer, and we have certain requirements that we want to work with sponsors that are going to be responsive, that work on certain platforms that we utilize. Are they fully in the IBD space, or are they just trying to garner some sales and then leave? We want people that are committed.
I think that's a fair comment, and that kind of brings into a few things that we've said along the way in this conversation. Like, ultimately, your job is to protect advisors and their clients. So we've been through a lot of market cycles in this industry and seen a lot of things. So there are things that go sideways. So when the sponsor fails and investors have lost money or they're harmed, what do you want to see from that sponsor? And for those of those sponsors listening, can they come back from it?
Absolutely. It's all in how you respond that makes the difference. We currently work with sponsors that have had challenged products in the past. It was market-driven. It wasn't sponsor-driven, but they were very upfront. As soon as things started to look, like it could be a challenged product, they started communicating. They started saying why. They started, first of all, started with us, the broker-dealer, let us know first. And then channeled it down to the financial professionals and then down to the investors. That's the proper way to communicate in this space, for sure. And that they were proactive, calling the financial professionals, saying, hey, this is what's going on. If you'd like, I'd like to get on, a phone call with your client to even explain it. Things like that go a long way. They go a long way in how the sponsor responds to a bad market, because you're going to have them. They're inevitable. Just their response and the way that they communicate the whole thing, not defensive, this is what happened, this is why, this is the lesson we learned from it for the future.
And I think one of the things about your process and how you would respond to that makes your due diligence process unique is that does come down to the relationships. If it's a true relationship, you're going to want to communicate. You're going to want to tell you and do that. And I think that's something that we pride ourselves on in the ADISA community, is those relationships and making sure they're long lasting so that communication matters when something goes wrong.
Absolutely. And being part of ADISA is a big part of it, because, it's a community and we communicate within this community. And how you've handled something, even if you're not on our platform, is going to get back to us. So yeah, you talked about, can they come back from it? Yes, but it can also harm them in the long run because they didn't respond correctly the last time.
Makes sense. So I have a couple final questions, more on a bigger picture view. So for someone looking to become a due diligence officer, what skills and traits separate high potential due diligence professionals earlier in their career?
It really comes down to how your brain operates. It's kind of funny. I say to be a successful due diligence officer, you have to have an analytical brain. You have to be that type of person that wants to back into something, figure out how something works. If you were a kid that took something apart just because you wanted to figure out how it worked, I think you might be a good due diligence officer. The industry is broad. There's a lot of information. There's a lot to learn, and you're not going to be an expert on anything. I don't claim to be an expert on anything. I just claim to have been in this business 30 years and had a lot of experience and see how things have gone in the past. I can't predict the future. I don't think a due diligence officer is needed to predict the markets or the future. You can obviously research them, but having that research brain, that analytical mind, and wanting to make a difference. I think you kind of have to take this job a little personally. There's a fine line between too personally, because you can get your feelings hurt really easily. But I think taking it personally enough to, you're evaluating whether this offering has a reasonable chance for success. And would I put one of my family members, if they were suitable for it, would I put them in it? Would I trust that? And that's what I mean, kind of taking it personally. I don't know these investors, but I certainly don't want them to lose any money on my watch, because it reflects on me. So I think you kind of have to have that kind of just personality. I often say, you can teach people to be due diligence officers, but at the same time, you kind of have to have that just personality to want to inquire and find out why.
So if you're listening to this and you're a student or someone looking to get into due diligence, I know Amy, I know our industry, there's a lot of openings in that, a lot of up-and-coming spots, so please reach out to us. We are trying to grow the younger due diligence professionals in the association. That said, we've talked a lot about sponsor transparency. So if you could set one new industry standard for sponsor transparency that doesn't exist yet, what would it be?
This is a really tough one. We spoke about communications. We spoke about quarterly investor updates, things like that. I think having items like that as a standard would be great, but I get some pushback on that because this asset class doesn't require it. It's triple net lease. Still, those communications make them a priority because the investor may understand it's a triple net lease asset with a 30-year lease and it's just going to do what it's going to do. But learning more about what's going on in that area, or even the tenant, what's going on in their world and how it could affect. So I think those communications, but I really think it kind of boils down to the BD side. I think putting standards in place on the BD side, the people that are actually the allocators and the ones that are doing the due diligence on these products, having some standards among ourselves as a community would be very helpful. Nobody that is here at ADISA wants to see anything go wrong in this business because it affects the whole business. It puts a bad light on the business. So the people that are here, they are interested, they're invested in this industry and want to make it successful. I want to see more broker-dealers and RIAs with that mentality of we need to do more as a community to communicate within ourselves, say, we really think that sponsors should provide XYZ, and communicate among ourselves on what we feel like should be the standards.
I think that's great, and I know you as a board member are also running the BDAC, so You're trying to build that up within our own community and network as well. So last question, what does the due diligence process look like 5 years from now? And are you optimistic or cautious about where that future is going?
5 years. I do believe that AI is going to continue to be utilized, integrated. I think it's going to be much more efficient. I can say that I'm very excited about that. I'm seeing that already, efficiency in the process because the data gathering was so lengthy. But it's moved to and will continue to be a sponsor relationship-driven industry. And I'm seeing it more and more, especially on the financial professional side. So this is really not due diligence, but financial professionals, the ones actually selling these products, they want those relationships as much as we do. But on the due diligence side, I think it's going to be very heavily focused on those relationships and whittled down to who you feel comfortable with. Because the more this industry grows, the more entrance to the space, there's going to be, your trusted partners, and those are the ones that are going to be providing education for the financial professionals and, fully involved in educating them on how to sell their product.
That's great. If you are listening to this and you're looking to be a trusted partner, we do have future events coming up. A great way to start building relationships. I know I speak for Amy and myself when I say we would love to see you at an upcoming ADISA event. Thank you, Amy. For more resources and information about alternative investments, visit adisa.org. Stay tuned for our next episode coming soon. And don't forget to like, share, and subscribe to ADISA's YouTube channel.